Now, joining our discussion to share their experiences, stories, and journey as a listed company are executives from four of the Philippines' most dynamic corporations. Allow me to introduce these companies and their one by one. Beginning, of course, with SM Investments Corporation. This was founded by Mr. Henry C. Sr. in 1958 as a single shoe store. It had its IPO in 2005 and is now the largest capitalized Philippine company, which is listed in the Philippine Stock Exchange. It has interests in retail, banking, property, and has total assets of over 1 trillion pesos. That's as of the end of March 2021. SM strives to serve as a catalyst for development in communities across the country by providing inclusive economic opportunities, promoting environmental responsibility, and of course, encouraging social development. And ladies and gentlemen, we are very, very honored today to have with us Mr. Jose T. Sio, Chairman of SM Investments Corporation and Director of China Bank Ortigas Land, NLEX Corporation, and Far Eastern University. He is also advisor to the board of BDO Union Bank and the chairman of SM Foundation. Mr. Shaw was instrumental in the 2005 IPO of SM Investments, which is the largest listed company in the PSE today with a current market capitalization of over 1 trillion pesos. Mr. Sio was Finex CFO of the Year in 2009 and was voted Best Philippine CFO in various years by several publications in Hong Kong. A graduate of New York University with a master's degree in business administration, Mr. Shaw, a CPA, is a former SGV partner and has extensive travel and work experiences here and abroad. Very honored to have you with us, Chairman Shaw. Moving on to our next company, that is, of course, Ayala and BPI. BPI has been listed since 1971. That's 50 years ago. AC since 1976, so 45 years ago. And Ali since 1991, 30 years ago. There are actually 12 Ayala Group subsidiaries and affiliates listed in the PSE. So you can see that list on your screens here. And you've got Ayala Group's A-REIT, that is the country's REIT forerunner. After that IPO in August 2020, several other property developers launched their own REIT vehicles. The Ayala Group has pioneered sustainability-themed capital market transactions in the Philippines and in the ASEAN region, aligning itself with the increasing focus on ESG by investors around the world. So these include, of course, the various climate and sustainability bonds which were issued by BPI, AC Energy, and Manila Water. So ladies and gentlemen, to represent BPI and AC, our next panelist is Mr. Jose Teodoro or TG Limcauco. He's, of course, a top executive of one of the country's largest conglomerates. And effective April 22, 2021, Mr. Limcauco became the president and CEO of the Bank of the Philippine Islands. He was also appointed non-executive director last February 2019 and a member of the executive committee in BPI. Now, before coming to BPI, he was the Chief Finance Officer, Chief Risk Officer, and Chief Sustainability Officer of Ayala Corporation, which is, again, listed in the PSE. He was also the Chairman of AC Energy International and the President and CEO of AC Ventures Holding Corporation. He was also a director of several Ayala companies, including publicly listed Globe Telecom and Integrated Microelectronics Incorporated and the energy, infrastructure, industrials, and healthcare companies of Ayala. He was also a director of the company that operates Zalora Philippines, and he remains a director of Mint, the operator of GCash. Previously, he served as president of BPI Family Savings Bank, that was from 2010 to 2015, and as president of BPI Capital Corporation from 2007 to 2010. Thank you, Sir TG, for joining us today. Next, we've got Wilcon. This is, of course, one of the country's leading home improvement and finishing construction supply retailers. It has 65 branches, 27 of which were added or opened from the 2017 listing date. The market cap of Wilcon more than tripled to reach over $1.5 billion within just 4 years from the IPO. Plans to open 9 depots in 2021, and it also targets to have 100 stores by 2025. So our next panelist, of course, the lone female In the pack is Ms. Lorraine Bello Singcochan, the President and Chief Executive Officer of Wilcon Depot Incorporated. Ms. Bello Singcochan has held various positions in the Wilcon business. She headed the company's IT department that resulted in the digital transformation of Wilcon's key processes. Now, with the company's aggressive expansion plans, she was entrusted to lead and manage the first ever depot store format of Wilcon, which was from 2003 to 2005. Following her success and experience in managing the first Wilcon Depot store, she then moved to serve as the Executive Vice President for Operations in 2005, and to continually support the rapidly growing organization, she was appointed as the Chief Financial Officer in 2006, holding the position until March of 2016. She was then appointed as President and Chief Executive Officer of the company in April 2016, where the company successfully carried out its IPO in 2017 and has continually moved to transform and adapt to the ever-changing needs of the market. In 2018, Ms. Bello Singcochan was named as one of the Forbes Emergent 25, the women making their mark in Asia's enterprises, the only Filipina on the list. And finally, we've also got Pure Gold. So in 2010, before its IPO, it had 69 stores. And in 2020, this shot up to 469 stores nationwide. And just as an idea, in 2010 pre-IPO, its net income was 510 million pesos. And guess what? Its 2020 net income was a little over 8 billion pesos already. Pure Gold became a member of the stock exchange in 2017, and the 6 years after listing has consistently been a PSEI constituent. So it's part of the index. Now for 2021, Pure Gold targets to open 30 to 40 new Pure Gold stores and 2 SNR warehouse clubs. So we're very pleased to be welcoming our fourth panelist. He is Mr. Leonardo B. Dayao, the current president of Costco Capital Incorporated, Director and former President of Pure Gold Price Club Incorporated, and the Vice Chairman of the Philippine Bank of Communications. Mr. Dayao is also the Chairman of Carela Management Corporation, the operator of SNR Memberships Shopping, and League One Finance and Leasing Corporation. Mr. Dayao is a certified public accountant with many years of experience in corporate finance, banking, and retail operations. Welcome, sir, and thank you for joining us.
Thank you.
Okay, ladies and gentlemen, we are again inviting the audience to type in your questions to the panelists through the chat box. So welcome to all of our panelists to this very important discussion, of course, on what has an IPO done for your company. So welcome to every one of you. I'm going to kick off with motivations. And I think this question will be going to our newbies, if we can say that, the latest ones in the pack that have gone public. This is, of course, Wilcon and Pure Gold. We'll kick off with the ladies. Ladies first. So Miss Lorraine, among our panelists here today, you guys are the relatively younger companies. You've listed within the past 10 years, actually. What were your primary considerations that made you decide to go public? It actually took you, this is for the audience, more than 30 years, before that 2017 decision to finally go public.
Yeah, thanks, Danny. The primary purpose or the primary consideration, really, we wanted to expand our store. So we had lots of success in our store openings, our store format, the depot type stores, and we already have a lot of land banked. But we needed really to raise capital to open up the stores that we wanted to expand to. And right now we have a goal of 100 stores by 2025. And so fueling this expansion, we took to going public. So most of the proceeds actually that we raised from the IPO has already been spent, and all of it's really on the store opening. And apart from the expansion, we really also wanted to cement my father's legacy. As he grew the business, he was the one who really led and became the leader in the home improvement industry. And that's something that was important also to us as a family, as the Bello family. And in that way also, we wanted to push more for succession planning and be more organized, be more structured in how we succeed from first gen to second gen, and hopefully more third, fourth, fifth, but also being a progressive publicly listed company.
Mr. Rain, just to follow up on that, why did you think that 2017 was, ripe for the picking? Was this IPO in the works or in your consideration from your family earlier on, or what finally led you to making this decision?
Probably many, many years before our actual listing in 2017, we had been approached by a lot of different, I would say, banks or different entities to raise capital, raise funds. But we didn't really sit down and seriously consider it until maybe perhaps 4 or 5 years before we listed. So it's actually, it took that long.
Mm-hmm.
And maybe after much talk with advisors, with different people, like we didn't have events like this. Actually, we didn't have
Yes.
advisors that at the time, so we had to like ask around. And I think 3 years before the 2017, that's when we actually sat down and said, okay, let's look at the books, let's look at what we can offer, and let's look at where we want our market or where we want Wilcon to go. And so that's how we came up to it.
Very interesting. Sir Leonardo, can you jump in and explain for you guys for Pure Gold? It took 13 years from the time of the incorporation before the IPO. Was this already in your mind when earlier on? And what were the key considerations apart from Miss Lorraine had mentioned? Of course, capital raising. You want to expand, and Pure Gold clearly expanded. But what other considerations did you have in mind to say, okay, we simply cannot expand if we stay private? We simply must go public right in 2011.
As shown on the screen, at that time in 2010, 2011, we were only 69 to 70 stores. And we were, so to speak, a new guy in the block. No, we were small. The older companies in the same business are already well spread all over the country. And the business that we are in would require a lot of long-term capital because we'll need real estate, we'll need buildings, we'll need equipment, we'll need systems, we'll need a lot of working capital. No, so at that point, come to think about it, what are our options if we want to realize our dream of expanding and maybe catching up with the older guys in the block? Either we borrow or we have to go into capital raising. And that's where the opportunity for an IPO presented itself. It also helped that my background is basically that of corporate finance. I came from a long stint in a bank and investment house. So it seems natural that if we are to pursue our expansion plans, cover the market, and pay off whatever bank loans we had to go into the capital market. And that's the motivation basically that brought us to go into the IPO.
Thank you, Sir Leonardo. I'll bring in Chairman Shaw here to jump in, especially on what you have discussed in terms of dilution and family transitioning. Sir Shaw, you were present and played a big role, especially in 2005 when SM Investments was the largest IPO in PSE history to list. How did you convince the family members basically to give up, part of their control? And how did they manage, or how did you manage this transition? You would have had new directors, more independent directors, institutional advisors, and less, so to speak, freedom to basically do only what the family had set out to do.
Well, it is. I credit that to our founder, Mr. Henry C. Sr., where 25 years ago, he was telling me already that he wants to be the number one property company, and he wants to be the number one banking, and he wants to be the number one retail company in the Philippines. When in fact, at that time, we have only one building uh, there in Magallanes, and then we have only two shopping malls, and of course, the bank, the Banco de Oro at that time was only a savings bank. So I was impressed by his foresight and his view and his dream. I asked him, Mr. C, how long do you think will you realize your dreams? Because I said, if we just rely on our internal cash flow, it will not be done in our lifetime. I'm saying both of us. So I say, then he look at me and then he say, what do you think? I say, we have to go public because public, then you can source a lot of fund, especially if you do international, the IPO, the international funding. That's where the family got together and think it over and decided to go public. So why the IPO? I think the first concern is really the source of fund.
Mm-hmm.
Source of fund. IPO at that time, we were able to sell our shares at 22 times our earning per share.
Mm-hmm.
Meaning to say, for every peso of net income, we were able to price our share at 22 times. That was almost 2.5 times of our book value. In other words, for every 1 peso of capital, we were able to sell it at 2.5 times in IPO. So the dilution, yes, we
Mm-hmm.
discussed it. But I told them, if we have, for instance, if you have 1 million pesos and you are able to sell that 1 million pesos at 2 million by selling 50% of your ownership, so you end up still owning the company 50%, but you got additional fund of 1 million. So
Mm-hmm.
it's a huge come on. But beyond the source of fund, I was already discussing for a family corporation, that is the best way to prepare for the retirement inheritance of your wealth to your children. Because that is a very tax efficient way of preparing your inheritance tax.
Mm-hmm.
Because if your shares are listed, you pay only the transaction tax of the Philippine Stock Exchange of 1/4 of 1%, I guess.
Mm-hmm.
So it's the best way to have an inheritance tax for a family corporation.
Thank you, sir.
The
So,
other thing,
go ahead, sir.
go ahead. The other thing, in the IPO, you sell your share, you also pay only 1/4 of 1%. You don't pay the corporate income tax in
Mm-hmm.
selling your shares. Unlike if you are not a listed company, then you pay a higher tax. So there are many attractions in the IPO. But I would say going public has also a responsibility on the issuer. Yeah, you were about to say something.
No, sir. Just wanted to highlight very important points here. So, the two previous speakers had mentioned that it's really for expansion plans. But for you, it's really, seeing these plans come to fruition now. While you're alive, you had mentioned that also, and to see the dreams come
Yes.
true now. And another point that you highlighted was the tax efficiency purpose, which really should be looked at in more detail. Thank you, sir. We'll go back to some of those points later on. I just wanted to bring in Sir TG Limcauco here to jump in. In terms of, of course, everybody wants to raise funds, right, when they're in the growth phase. And that's precisely probably what also led BPI, Ayala, and your 12 other listed companies to list. But what are the benefits that the companies have in continuing to be listed after they've already initially raised, this big chunk of money from going public?
Well, Danny, the beauty of being a public company is that it's very easy then to tap the markets again and raise more capital, right? If you are not a public company, then it's very difficult to find possible new partners or new investors. Whereas if you're a public company, You can sell new shares on the market because, one, it's very attractive for several reasons for the investors. Number one, there is some level of transparency already. As a public company, you are mandated to be transparent. You're constantly disclosing what's happening in your company, what your strategies are. Two, there is a reliance upon that the numbers you have always reported are fair and accurate, so people have a lot more faith in the quality of your numbers. And three, more importantly, it's also a very liquid instrument. So new investors can come in knowing that when the prices go up, that they can exit very easily. So in comparison to a private company where you go in to exit and you want to cash in on your investment, you've got to find some other buyer you need to convince to buy your shares. Whereas in a public company, your new investor can come in and then sell in the market maybe 2, 3, 4, 20 years down the road. So it's a very efficient way to raise new capital. And, Mr. Dio, Mr. Sio, Lorraine, they all said it right. You do go public because you want to raise capital that's long-term. You want to raise it in sufficient size to fulfill very big ambitions, like a major expansion. As Mr. Sio said, Mr. C wanted, a very big vision of being the largest real estate company. And sometimes, no matter how wealthy you are, the individual capacity to fulfill those dreams just can't be met. And you need to go to the public markets.
Sir, now for you, as AC, and you were also CFO of AC previously. Sir, tell us how different and what decisions do you take into consideration when you're thinking of IPOing, a subsidiary again? And now you mentioned that you already have different sources that you can tap. It's very easy to follow on offerings, to even tap the bond markets. Now that you were listed, you have this good reputation. What's the incentive still to be going for the markets for the other subsidiaries?
Yeah, I guess, Danny, your question is, why do public equity versus, let's say, public debt or raising debt, right? Every owner, every treasurer, every CFO must balance their capital structure. When you raise debt, clearly that's better for the owners because you only have a fixed debt that you must have fixed cost. But of course, the risk is also greater in terms of the equity holder because you need to service the debt first. So there's always a balance that must be struck, depending on what the use of the funds will be for. If it's very long term, you either try to go out for very long term debt, or you fund it with capital. And it's also trying to mitigate the risk because you don't want to be forced or to be caught in a situation where your business plans may not have progressed to the extent that you thought they would progress, that then you get caught where you have to sell a portion of your company to service debt. So it's something that the owner and their CFO must talk about. And ideally, if it's a very long-term, ambitious project, you might want to fund that with equity, with equity capital.
Interestingly, you did tap the equity markets during pandemic. You did the A-REIT pioneering,
Yes.
actually, not just that it was during a pandemic, but also it's the first REIT listing ever.
Yes. Yes.
Plus as well, AC Energy, although this may have been in the works even before. Tell us, how did the pandemic really impact the valuation of such companies and the plans that you had?
Well, obviously, the pandemic puts a little damper to the market, right? People are very cautious. The global economy was in turmoil, and so therefore there was a sort of a hesitancy for foreign and local investors to be in equities. But in the end, if you have a good story, like we had a good story in A-REIT, and Secretary Dominguez said it, it allows public participation in the real estate market, which in the Philippines is still a market that's severely untapped, severely underinvested. And therefore, the REIT structure allows investors to have almost a fixed yield, a fixed return, a floor on the return, because you're basically getting the returns from the rentals with a little capital appreciation on the properties underlying the REIT. So it's a great structure, as Secretary Dominguez said. So we're very proud that we pioneered it. And since Ayala Land pioneered it, other real estate companies have come out and said they'll do the same thing. On AC Energy, that thing, it's a company that we've grown, and we've really tried to be a responsible citizen, being very focused on renewable power. And I think that's what also attracted a lot of people to the stock, because the focus on green energy, I think, attracted international investors as well as local investors. So while the pandemic might have put a damper, in reality, if you have a good story, a good business plan, and a management team that performs, I think anyone can go and do a public offering.
Okay, so the fundamentals should not really change.
Fundamentals will always triumph.
They will always triumph. Thank you for that. Let's talk about price setting with Miss Lorraine. And at this point, I also want to encourage the audience to please cue in all of your questions. I'm sure that you're absorbing all of this knowledge, so just send in your questions. We will get to that later. Miss Lorraine, let's talk about IPO price setting. So it's on the one hand, you want to raise X amount of funds. On the other hand, you need to balance it with what is attractive. Is it too high compared to others that are already listed? Is there enough demand for this at this price? Tell us, Wilcon's IPO was specifically successful when it came to the market valuations, not just from the day of the IPO, but even after that. How were you able to strike a balance between maximizing the proceeds and setting an attractive price?
So, Danny, we actually had a lot of internal negotiations within ourselves and also with our advisors, our underwriters. How we wanted to approach it was basically the way we approach business, which is to put in our values in the way we run the company, which is to have trustworthiness, and we wanted to build a long-lasting relationship and prudence, having a practical price for the intended market that we wanted to serve, which we really thought was mostly the customers of Wilcon, because we thought that Wilcon's primary investors would probably be the ones that actually come to us and are our customers. And so from the time that we plotted our expansion plans, which is where we actually based our offer price, we looked at the market. We looked at actually the Philippine market, and actually we were the only ones who actually were going to list as a pure play home improvement store. And then we looked also at the region, and our underwriters and our advisors actually were putting up numbers. We're putting up a range, because when you list, you put in a range, and we decided we wanted to go a little bit on the middle or lower side of it, because we really wanted to leave money on the table. And I'm sure many of the audience here, if you've been thinking about IPO, and people will always say, or usually will say, leave some money on the table for the investors to make a profit out of. And so that's the thought process. We wanted to be upfront. We wanted to say, this is the expansion plan. This is where we want to put the money. This is where we want to put the money in. And this is what we're going to do. And so far, so good. And that's what we did. And we have very many happy investors, because our stock price has actually, well, I'm sure the PSE knows, it's kind of been going up and up, and it hasn't really actually gone down. So I think that formula for us worked, because they know Wilcon, our customers know Wilcon, the Philippines. And also the foreign investors also have come to know us, and this is how we approach business, and this is how we approach pricing, and how, as Wilcon, private or public, this is who we are, and we wanted to bring those values there.
That's very nice. In fact, as you mentioned, it's actually tripled after 4 years in 2017. So happy investors indeed. And as Ms. Lorraine said, think of your investors as the ones that love your company and love your product and what you have to offer, and not just trading it in the short term. So this is a very important point that you've made here. Thank you so much for that, Ms. Lorraine. Now, another one that I want to discuss about that, not just in terms of pricing but performance. Mr. Leonardo Dayo, I wanted you to get your opinion on this. Pure Gold has been remarkable. When you look at the fundamentals, the metrics, from 70 stores to 400 stores, 6 times the amount of stores. Tell us, are you able to separate, the impact of having had this funding from the IPO from the growth you would have had just doing it organically and just doing your business as normal? Was the amount of funding really pivotal in your ability to make your operation so successful?
I'd say that a very big percentage of our expansion and success is on account of the funding that we get from the IPO, to such an extent that at this point, the company is practically debt-free, except for the corporate notes that we issued last year. No, so I'd say we really made very, very big strides immediately after the IPO, we were able to increase the number of branches, principally because of the availability of long-term funds without the burden of interest expense, without the burden of debt servicing. So, especially in the initial few years, it's really the funding that you get from your IPO that will propel your expansion. And then as you expanded, your company's capability to generate more income, to generate more revenues will also be multiplying, and therefore you can finance your forward expansion some more. So it's really a very good measure to that the expansion or the success and the success of an enterprise that went IPO may be attributed to the funding that the IPO has provided.
Okay, so multiplier effect, you needed a springboard to be able to implement all of these plans, and then in the long term it was actually beneficial as well for all of your corporate plans. Thank you, sir. I would like to bring back Chairman Shaw and Sir TG in terms of Ayala Corp and SM being transparent. I think this is a contentious issue for many people that makes them very hesitant to want to go public. Chairman Shaw, you've been an advocate here, even off camera. You've been saying we need to be more transparent to shareholders. We need to disclose the sustainability practices of the company. Does this have an advantage in any way? I mean, is it not also disadvantageous when it comes to disclosing too much and putting yourself up for more criticism?
The question is, does corporate governance good for business? Does corporate governance increase your revenue and income? This thing has been discussed before we go into IPO. And we answer yes. And it's proven. Since the time of our listing 16 years ago, if you have invested 1 million pesos during our IPO, that 1 million is now worth almost 9 million today. That's about 8.5 times. Because through the leadership of our chairman, that time is Mr. Henry C. Sr., he believed in transparency. He believes that anything that we decide, the family decide, the first question to be asked is, how would this affect our minority shareholder? If it is negative effect to our minority shareholder, that's the end of the discussion. So he would rather give more income to our minority rather than to the family. So it's transparency. That that will
Sir
be the
TG,
answer. Yeah.
thank you. TG, do you want to add to that in terms of you actually have to have more work? There's more work to be done when you're a listed company. There's a lot of demands when it comes to transparency and reporting. To what extent are you able to use this to the company's advantage? I mean, not necessarily in the share price, as was mentioned, but in other ways as well for the benefit of the shareholders.
No, what Mr. Sio said is absolutely right, right? A governance transparency actually helps the business. Yes, Danny, you're right that there's a lot of extra work that you have to do for regulatory purposes because you've got to report it. But the discipline within a company and within management to reflect upon your actions as to how they affect minority shareholders will make you make the right decisions. And also because of transparency and governance, you need to convey your long-term strategies. And there's always a question of, do you think about the long term or do you look after short-term earnings, right? There should be no argument there. You should always look after the long term and convey the right strategy from day one. Therefore, people know what to expect from short-term earnings. But you cannot get your stock to multiply 8.5 times, like Mr. Sio said, unless you think long term. Companies must always think long term, and again, that's why it's very appropriate when you do equities, because it's long term funding.
Thank you, sir. Sir Shaw, just last question for you. Do investors now care? Do they care that you are transparent, that the governance issues are addressed here? And, as you mentioned earlier on, that sustainability needs to be made more transparent. Are people really asking for this? Or are people really just looking at, the returns?
About 10 or 8 years ago, when we go into roadshow, international roadshow, the question is always about profit. It's about, how much dividend, etc. In the last 3, 4 years, most of the major investor has now a different mindset and looking at a company. The question now is, what do you do for your society? What do you contribute for sustainability? What do you do for environmental? And what is your corporate governance, not only to the shareholder, to us in SM? We have corporate governance to our shareholder, both minority and majority. We have corporate governance to our customer, that we should give money, value for their money. We have corporate governance to our banks. We should pay them on time. We have corporate governance to our government. We should follow the rules and regulation if we want a clean, peaceful environment. All these things
Mm-hmm.
taken together, that's how we were able to grow years and years. And now, the investors are demanding not just the financial statement, they are now demanding a comprehensive reliability annual report. Meaning to say, starting 2020, SM report is not only the financial statement audited by the auditor, but rather it's part of the annual report, which consists of
Mm-hmm.
our social responsibility, our environmental responsibility, and our sustainability taken together in one report. That's what the future investor is demanding now, because they see that we as a people, if we don't take care of our environment, of our sustainability, then the next pandemic will not be this pandemic of COVID, but it will be a disaster pandemic. You have typhoon, flood, earthquake, etc. If we don't take care of our planet, and each businessman, each
Mm.
one of us should share that responsibility.
Thank you, sir. So more discerning investors, and hopefully this pandemic has served as a lesson as well for us to be looking deeper into company practices. Thank you so much for those insights. And finally, I'll just bring in our two other panelists here to answer. Maybe just maybe Miss Lorraine and Sir Leonardo, just answer this question: when is the right timing for an IPO? Companies, of course, would love to list if they could, right? But usually that the timing is not right. Especially now, there's a lot of questions on whether the volatility of the markets should be taken into account, or whether the fundamentals will triumph in the end, as Sir TG has mentioned. Sir, Miss Lorraine, go ahead. Timing.
Well, for us, first, we had to make sure our housekeeping, our books were all in order and everything okay. The second is we chose our advisors very carefully, the ones that we would be listening to, because we really relied a lot on our underwriters and the advisors that we had. And so joining their knowledge about the history, the past, the different markets, because this was the first time we'd ever done this, and we don't really know very much about the capital markets, and so we really looked to them for advice. And when they showed the different data, that it was the right time for the market to PSE, they had all these factors that they were showing us, and that was really okay. Books are in order, everything's in order, company okay. Um, then we said, okay, let's list. It seems to be the right time, and it was actually. So it went pretty well for us from when we listed.
Thanks, Ms. Lorraine. Sir Leonardo, can you jump in on that? What did you look for, and what should companies be watching out for to help them determine that the timing is right?
Well, if I use my experience, the best timing is at the start of what you feel is the beginning of a long journey towards expansion, so that your expansion program will be financed by the IPO, and at the same time, you can carry your investor towards benefiting from the fruits of your expansion. That to me is one good timing. The other good timing is if you can afford to wait until you have scale up the operation of the company, until you have already reached a certain scale that is quite large, then that may be the best time to go into IPO. By that time, you should be able to do a good bookkeeping, a good financial recording. You have a good organization and those things, no. But either way, depends really on the. But I favor starting when you are just about to embark in a journey of expansion.
Okay, so when you're going to start that momentum there, but also as Ms. Lorraine pointed out, you need to have the books in order. There's going to be a lot of requirements. That's going to take a lot of time. So you need to be ready to be complying with all of these. Okay, ladies and gentlemen, we will be taking your questions here, and joining us for the Q&A, we do have PSE President and CEO Sir Ramon, Mr. Ramon Monzon, joining us as well. All right, so Sir Mon, we do have a couple of questions. First, I just wanted to throw this to Sir TG because it's a very interesting question on balancing the pressure of catching quarterly earnings expectations and your long-term strategic growth. Of course, it's always fair to say that in the long term this will be good, but in the short term, people are still looking at those earnings reports.
Well, Danny, I'm a big believer in long term. I don't think you should balance it, because if you're trying to balance it, that means you're not conveying the right message to your investors. You should be transparent. You should be conveying what your long-term strategies are. And if they understand your long-term strategies, then they'll understand what the earnings will be in the short term. And you should be able to meet those. So it's really about transparency. It's about making sure you convey your actions, your strategies, what your activities are. As you make board decisions, you need to be very open with your shareholders. You need to report the numbers as they come. I don't think you should ever sacrifice your long-term strategy to meet a short-term number.
Very good answer there, sir. Okay, so stick to your guns. Try not to please the market too much and just go on with what you're meant to be doing. The next question, sir, for President Monzon. What was the PSE's rationale behind the initiative to relax its listing rules? Is this really brought about by the pandemic, or is this something that you had been looking at for quite a while to encourage more participation?
Well, there were a couple of reasons we decided to, review our listing rules. Number one, not only for listing, but all the time, we just don't look at the operations of the Philippine Stock Exchange. We always benchmark our operations against our other peers, whether regional or some international. So we make sure that we're always up to date on the developments in the market. We also know that, that our listing rules, the last time they were reviewed or amended or revised was in 2013, 8 years ago. So you can imagine, that a lot of the metrics, the targets or the share, stockholders' equity targets were all, 8 years old. So we had to really update that. Third, I'm a little ashamed to say we were falling behind really our regional peers in terms of the number of of companies that were listing at the exchange. We had to do something. We said, we have an SME board, but we only had 4 SMEs listed in the board. So we said we had to make sure that we attract more companies, especially in the SME board, because it's the SMEs that really need a lot of capital and an additional I guess, incentive for us to review it, because during the pandemic, we realized that it would be hard for these SME companies to be going to the banks and taking out bank loans or raising up debt capital, because the banks obviously have become more strict in their lending, I guess, standards. So we felt these companies need capital, and it's time to relax the rules and give them access to the capital market.
Okay, thank you, Sir Monzon. So, in fact, it's not something too surprising here. It's something that helps us become a competitive and more developed market, and of course, allows investors to participate in a more efficient way. And finally, sorry, we don't have enough time for more questions. It's been such a interesting discussion, but I'd like to close with Chairman Shaw. Of course, you have the most experience among everyone here, but everything has been positive about the IPO. What do you think are the risks in the IPO listings?
As I said, IPO is good for a corporation as a source of fund, as a source of encouragement to professionalize the organization, as a source of encouragement to practice corporate governance. But in return, it is the responsibility of the company, especially the management, to deliver what it has promised. It is the responsibility to also provide long-term growth for the investor. Also, it is the responsibility of the management to comply all the government regulation regarding the initial public offering, and also for paying the right taxes. Uh, so it worked both ways.
Thank you so much, Chairman. So, of course, there are some risks to listing, but as you mentioned, if you want the benefits of going public, you do need to be prepared to take on increased responsibility, particularly to our shareholders and even to society there. So, thank you so much to our distinguished speakers and panelists for presenting perspectives on IPO listing and, of course, for sharing opinions and their experiences on the viability of capital raising. And as we end, let us again welcome Mr. Ramon Monzon, the President and Chief Executive Officer of the Philippine Stock Exchange Incorporated, to deliver his closing remarks.
Hi, good afternoon, everybody. Let me share some, I think, relevant numbers that would recap what we talked about this whole afternoon. Can we have the slide, Pao? Okay. Here, these are the market cap of the companies represented by our resource speakers this afternoon. You will see Ayala Corp, for example, when they listed in 1976, their market cap was a mere 706.6 billion. As of April 30, it was at 465 billion. So it's almost I guess, 7 times, multiplier. SM Investments, when they listed in 2005, it was at 127.7 billion in market value. And as of April 30, it was at 1.16 trillion pesos. Pure Gold listed with a market cap of 22.08 billion. And as of April 30, 2021, it was at 107.7 billion. Wilcon Depot from 21.98 billion in 2017. Their market cap now is 72.2 billion. I show these market cap numbers to point out 2 things. First, the current value of these companies may seem daunting, but remember, they were not always this big, as you saw on their market caps and on their listing date. Next, the decision to go public, as we heard from the 4 resource speakers, was the major impetus that enabled these companies to be where they are now in terms of growth and development. The decision to do an initial public offering may not be an easy one to make, But I think it was evident from the stories and insights of our resource speakers that had their companies opted to remain private family entities, they may not have been able to fast track their growth and expansion. It was also brought up, one question our potential listing applicants might have is, what is the correct timing for an IPO? Businesses are in varying level of readiness to sell their shares to the public. To help entrepreneurs, we have our free listing assistance program. I invite you to be part of this program to help you in your IPO journey. For our part, we are hopeful that the pandemic relief provision in our amended listing rules, which will be in effect until next year, will help companies who need the financial boost as they gear up for post-pandemic business activities. With this provision, PSE will give due consideration on the impact of the pandemic when evaluating a company's financials. We also look forward to more SME listings, especially as we now have a sponsor model in place to provide companies in high growth sectors the opportunity to raise funds even without the required track record. And of course, we will continue to have activities similar to this roundtable discussion to tackle the nitty-gritty of listing so companies can appreciate what going public entails. Before I close, I wish to reiterate my thanks to our distinguished guests this afternoon, Wilcon Depot President and CEO, Lorraine Bello Singkochan, Chairman Josh Shaw of SM Investments, BPI President and CEO TG Lim Cauco, who was speaking for the Ayala Group this afternoon, and Director Leonardo Daya of Pure Gold Price Club. I also want to extend our gratitude to Finance Secretary Carlos G. Dominguez III and Securities and Exchange Commission Chairman Emilio B. Aquino for supporting this event and our program to accelerate listings at the PSE. Finally, I want to thank everyone who joined us this afternoon. I hope that with a better understanding of what it takes to go public, you can now take your first step towards your road to IPO. Good afternoon, everybody.
Thank you so much, President Monzon. And just a kind correction, President Monzon, from Sir TG, AC growth in market cap from 1976 to today is not 7 times, but 700 times. It went from 700 million pesos to 460 billion pesos. And also, just for all of the audience that had sent in their questions, we're sorry there's not enough time to address that, but we will be addressing that offline. And if you have any questions, you can send an email inquiry to marketingservices@pse.com.ph. Again, marketingservices@pse.com.ph. So I'm sure there will be a lot more questions and technical specifications that you would want to be taken, and they will be responding to all of your inquiries. Now, on behalf of the Philippine Stock Exchange Incorporated, thank you for attending the Road to IPO Roundtable discussion on IPO listings. This has been Dr. Danny Laurel. Have a fruitful rest of the day.